Hello guys, this is the first video on my channel, and I'm going to be talking about the Ethereum flash crash that happened 2 days ago. So it's currently June 23rd. This was the crash that happened on June 21st. Business Insider was one of the first to report on this. Ethereum flash crashes to $13 before bouncing back to $2.96. And as it turns out, they report down to $13, but this is at the minute level of granularity, minute rolling average. They're actually um, Ether was exchanged for as low as 10 cents on the GDAX exchange, and it says bounce back to 296, which was accurate as of time of writing. But if we look at CoinMarketCap, it's about 340 bucks right now, with a total market capitalization of 31.5 billion. So, anyway, there are people that have reported on different social media that there was about a $30 million sell order that was placed. And there are a lot of people that assume that whoever placed this $30 million order must have lost a lot of money selling all of this Ethereum at this price. And my contention is that's not necessarily true. And what's important to understand about this crash is that it's not just from the sell order that was placed, but we have to look at the stop loss orders that were on the books. All right, so what's a stop loss order? A stop loss order is an automatic sell that occurs. Someone can indicate that they would like a sell to automatically occur if the price falls below a certain point. And this might seem to violate kind of the fundamental principle of buy low, sell high. Like, well, after the prices drop, why would you want to sell? And for some people, it's risk mitigation. Maybe they have $100,000 of life savings, and maybe they invested in some stock, and after the stock price falls such that their life savings has dropped to $90,000, they say, okay, I don't want to take any more risk beyond this. I really need to keep at least $90,000. So some people kind of just have a certain limit beyond which they don't want to fall any further because they just want a certain element of security. And to illustrate this, let's suppose that someone maybe bought some asset at $350 and they placed a stop loss order at $300. So maybe it initially went up, but then it dropped to $300 and they sell here. And maybe it continues downward to $200. And they were fortunate that they were able to get $300 out of it before it dropped all the way to $200. And I could see some appeal with Ethereum or other cryptocurrencies for a stop loss order if someone's concerned about the integrity of the technology behind it. So let's suppose that suddenly there was some breaking news that there was a problem with the Ethereum protocol, or there was some there's perhaps some problem with the Ethereum protocol that would have caused the price to drop to $1. And so maybe on the market, the price begins plunging. Maybe some people bought Ethereum for $300 and they say, I'm going to put a stop loss order at $200. So if the price is plunging quickly, I want to at least get $200 out of it before it drops to $1 or nothing. Because maybe they feel that the primary cause for it to ever drop below $200 would be a major malfunction, in which case it would likely be on its way down to $1 or to nothing. With cryptocurrency exchanges, or exchanges in general, there are buy orders that are on the books and sell orders that are on the books. And so this traces the price over time, but what I want to point to is down here. This is back in September when Bitcoin was still 600 some dollars, which I wish it still was today. But anyway, the height at any given price. So on the right side, the height at any given price represents the number of Bitcoins that people are willing to sell at or lower than that price. So let's say at $632, it has a height of around, let's say, 200. That means that that collectively there are about people were willing to sell about 200 bitcoins on this exchange at a price of 632 or lower. Likewise, on the buy side, there's let's say $618. And it says here that 206 Bitcoin can be sold. So anyway, this indicates that there are people willing to buy 206.57 Bitcoin at a price of $618 or higher. So anyway, the height of this block represents the volume of buy orders that exist. So if we went all the way down to $0, it's not on this chart, but if we went all the way down to $0 and measured the height of it, that would be the total number of buy orders that are on the book. And if we take the total height as we go up to virtually an infinite price, then that's the total number of sell orders on the book. All right, so anyway, let's move over to Paint, and let's suppose that in the Ethereum market on GDAX, maybe there were 1 million, there were buy orders for 1 million Ethereum on the book. And let's say that we start here at about a $300 market price. All right, and over here in red, let's say that at $250,000, once we hit $250,000, there's a stop loss order in place for 100,000 Ethereum to suddenly be put onto the market for sale. And maybe at $240, there's a stop loss order in place for 300,000 Ethereum to be put onto the market for sale. And if the price falls below $200, 800,000 Ethereum suddenly come on the market for sale. All right, so it's been reported that there was perhaps a $30 million sell order that was placed. So $30 million. $30 million sale. All right. So, and when the sale began, it was around $300, but the price was dropping as they placed the sale, because it bought up some of the highest price buy orders. All right, so let's say that as they placed this, so maybe maybe it was a sell order for 100,000 Ethereum, which at this market price, at $300 is worth 30 million. So maybe it's 100K sell order. 100K Ethereum at a $300 valuation would be $30 million. And maybe this buys up. Maybe this buys up really a lot of the highest price buy orders and presses the market price down just below $250. And let's say that the weighted average of all of these orders that were fulfilled by this 100K sell, maybe the weighted average was $270. All right. So whoever sold this 100K Ethereum gets $270 out of each of them. On average, maybe some of them are at 300, but as it's pushing down, some of them are down at 250. Let's say the weighted average is 270. So they end up getting $27 million of sales out of this. All right. So the value perhaps was 30 million, but they got 27 million. So they take a 3 million loss. All right, well that sounds pretty bad, right? But let's suppose that they know that these stop loss orders are on the book. And so the price drops below 250. And so 100,000 Ethereum come for sale, and they eat up more of the buy orders. All right, so we had 100,000 already sold. Remember, there were 1 million to begin with. 100,000 of them are gone. So we're down to 900,000 buy orders. And after the stop loss orders at $250, 100,000 more Ethereum came up for sale and fulfilled buy orders. So now there are only 800,000 buy orders left on the book. and maybe that pushed the price below $240,000, which pushed another 300,000 buy orders onto the book, which plunged the price even further. So there are another 300,000 sell orders, which matched up with some of these buy orders, and so there are 500,000 buy orders left. And suddenly the price drops below $200, which triggers 800,000 Ethereum to come up to sale. And what does this do? This plunges the price basically down to 0. 10 cents, we'll call it 0. So this eats up another 800,000. So I'm going to call this minus 300,000 buy orders. Or another way of thinking of this is that there are 300,000 sell orders. Even after fulfilling all of these buy orders, even at really low prices, there are 300,000 sell orders that are left at whatever the market price is. So let's suppose that whoever made the sell order knew what they were doing, and they knew that a lot of these stop loss orders were in place. So they took a $3 million loss on the way down from 300 to 250. But let's say that they knew this was going to happen, and they placed a bunch of buy orders. And let's say that as they're placing the buy orders, maybe the price is surging back up towards starts at 0 and up to $200 as they're doing it. But maybe the weighted average price is $100 for each Ether. And this is for 300,000 outstanding sell orders that were at whatever the market price was. So maybe they managed to buy at $100. So if they manage to buy at $100 and eventually the price rebounds to its equilibrium price of $300, then that means they've gained $200 on every Ether that they were able to buy at this $100 weighted price. So on average, they're gaining $200 per Ether times 300,000 of these outstanding sell orders at market price. Alright, so 300,000 times 100 is 30 million, so this would be $60 million. $60 million of profit. So they lost 3 million here, but they gained 60 million because they triggered this cascade of stop loss orders. So the net profit in this scenario, $57 million. Let me be clear. I don't know that this is what happened. I'm not sure of it. And these numbers here are purely hypothetical. I don't know that there are 100,000 sell orders on the book, or stop loss orders on the book at 250 and 300,000 at 240. I'm doing this just to illustrate the point that someone that knew that there were a lot of stop loss orders in place and knew just how much they needed to sell in order to cause this avalanche of stop loss orders to be flooded onto the market to plunge the price, and then they sell, and then they buy at this low price, could potentially profit. And I think this is something that cryptocurrency traders should be wary about if they ever have a stop loss order out. The market's still new. There's not as much liquidity as some of the huge stocks that are out on the Dow, let's say, and so you just have to be really careful about this sort of stuff. So anyway, that was my take on the flash crash, and primarily that there was a huge sell order that was placed that caused a cascade to send the price virtually down to 0, and then some people were able to buy at low prices. I don't know if this person intentionally caused a flash crash to be able to sell, but I'm just highlighting it as a possibility, and I just wanted to use some numbers to show that it is in fact possible that someone could profit off of such a scenario. Anyway, That's the end of my first video. If you liked it, then please like, share, and subscribe. I'll try to do more about more videos on cryptocurrency and math and comp sci stuff. I'm out.